Pakistan's Finance Minister Ishaq Dar announced on Friday that the cash-strapped country had received another $500 million from the Industrial and Commercial Bank of China Limited. Ishaq Dar said that the State Bank of Pakistan had received the money in its account and added that it would help to shore up foreign exchange reserves. Pakistan is in a race against time to implement measures to reach an agreement with the International Monetary Fund. The agreement on the completion of the 9th review of a $6.5 billion program would not only lead to a disbursement of $1.2 billion, but also unlock inflows from friendly countries. Pakistan has already taken most of the prior actions, and as a last step, the international lender has required Pakistan to guarantee that its balance of payment deficits is fully financed for the remaining period of an IMF program. Pakistan's exports of textile and clothing fell 29.76% in February to $1.18 billion compared to $1.68 billion over the same month last year. This is the highest decline in a single month since COVID-19, according to data released by the Pakistan Bureau of Statistics. The drop shows that the government would find it difficult to achieve the export target this fiscal year, leading to more pressure on foreign exchange reserves of the country. The drop in textile and clothing exports is gaining momentum over the past 6 months, owing to multiple factors including high energy costs, stuck-up refunds, and a slump in global demand despite the massive depreciation of the rupee. Shares at the Karachi Stock Exchange bounced within a short range on Friday as investors kept waiting for the confirmation of a staff-level agreement between the government and the International Monetary Fund for the $6.5 billion loans revival. The main reasons for the slide in share prices were rising political tension and uncertainty on the economic front. Finance Minister Ishaq Dar's statement on the IMF's alleged demand for abandoning the long-range nuclear missile program also hurt investors' sentiments. As a result, the KAC 100 index settled at 41,329.95 points, which is 0.87% down from the preceding session. Meanwhile, the Pakistani rupee recovered another 71% against the US dollar in the interbank market despite no visible change in overall economic situation. State Bank of Pakistan reported dollar closing price at 281 rupees 71 paisa at the interbank market. Bankers said there was no reason for the appreciation, but hopes for the better days ahead were there. Foreign exchange holdings of both the State Bank of Pakistan and commercial banks improved during the week ended on March 10th, reflecting the higher inflows of remittance and export proceeds. Pakistan's overall foreign exchange holdings rose by $92 million to $9.8 billion during the week. The central bank said its foreign exchange reserves witnessed a meager rise of $18 million to $4.319 billion during the week, but it did not mention the source of this increase. Financial sector experts say that the central bank has long been in the tradition to buy dollars from the open market to boost its reserves. At the same time, the forex reserves of commercial banks registered an increase of $74 million to $5.5 billion during the week, indicating improved inflows of export proceeds and remittances, thanks to a much higher exchange rate following the end of an artificial cap on the dollar rate. Short-term inflation, or weekly inflation as you call it, saw a record increase to 45.64% for the combined income group on a year-on-year basis for the week ending March 16th. Comparatively, the short-term inflation increased by 0.96% on a week-on-week basis as tomatoes, potatoes, cooking oil, and fruits became costlier. The weekly inflation is expected to intensify further as the full impact of depreciation of rupee, increase in petroleum products, hike in general sales tax, and higher energy costs is yet to reflect in official data. The commodity prices would show a rapid increase with a spike in demand. Just hours before it was due to expire, Turkey announced the extension of a deal that it brokered between Russia and Ukraine to facilitate export of grain amid contradictory statements from Moscow and Kyiv about the duration of the extension ranging from 60 to 120 days. Turkey and the United Nations did not specify the duration.
Her iki tarafla da yaptığımız görüşmeler sonunda 19 Mart'ta bitecek olan anlaşma süresinin uzatılmasını sağladık. Bugüne kadar 800'den fazla gemiyle 25 milyon ton tahılın Dünya piyasalarına sevkini sağlayan bu anlaşma, küresel gıda tedarikinin istikrarı bakımından hayati öneme sahiptir.